What's going on, guys? It's Brad. It is your OTC guy within Techbuds-Solutions. What is going on? Man, we had another great day today, didn't we? First time seeing one of your videos, Millennial Motivation. Let me take care of that. Welcome. Thank you. First time here. Appreciate it. Awake and ready. What, you taking a nap or what? That was Brian. David, what's going on, buddy? Tim, congrats. Thanks, man. Appreciate it. All right, so just letting some people pour in here. Let's see how many people we got. We got 40. Awesome. Hey, I think we're getting more and more. I'm loving it. Loving it. All right, so what are we talking about tonight? So let me just go ahead and introduce myself again. Looks like we got some new faces. So my name is Brad. I'm part of Techbuds-Solutions, and I trade primarily over-the-counter stocks that aren't traded on the New York Stock Exchange, and we trade them typically that are well below a penny. Fractions of a penny is where we start out at, and we find potential in these stocks by doing the appropriate due diligence and see value in them individually. I'm not telling you what to do. I'm not telling you what to buy or sell or when to buy or sell. I'm just providing a platform to show you how I find success, and it's your responsibility to take it from there. In no way, shape, or form am I telling you what to do. I'm just telling you, giving you an avenue to try and see if it's something that you might be successful at as well. So now that we got that out of the way, I also am putting links to our Discord chat as well as our Facebook group in the description. And so look for that at the end of this video once I get it uploaded, if you're not part of Techbuds-Solutions at all. All right. So a topic for tonight is my biggest trade, right? So closed the day a little bit under what the overall high was today on MSPC. However, saw monster gains on it. And so it kind of led me to think, there's a lot of people that in our group who are also in this position, and they took millions of shares way down when it was trading at 0.000 whatever cents per share, 0.002, which is when I initially got into it, 0.004, you name it. So when it's selling for that cheap, you're going to be buying a lot of stocks, right? Or a lot of shares, a lot of stocks, a lot of shares. So when you're buying a large amount of shares like that, it may be a little bit more difficult for you once it runs to sell all of that at once. So ideally, what you want to do is sell that off in portions as the stock runs. So I saw potential that it was going to run for a little bit. So what I did, I just held my position, so after tomorrow, when this catalyst goes through, I'm going to see how the stock reacts and make my plan accordingly on my exit strategy. And what that exit strategy is that I never tell anybody when to sell out of anything. It's something that you have to feel comfortable with. But a good rule of thumb is that, especially if you're first starting out, because, Lord knows that I had this problem too, is that I just wanted to hold on to all my shares because what if it goes this high and I can miss out on? Forget about that. Okay. What you need to think about is the green that you've already made and what you don't want to lose. You don't want to lose your initial investment. So what I always try to encourage people to do is learn from my mistakes. And so then sell your initial investment as soon as you make your initial investment. What I mean by that is when you double your initial investment, it's time to at least sell half of that. And then you can ride those free shares or that free profit until you're again satisfied with where you're sitting as far as your profit is concerned. So if you get in at $1,000 worth of shares at whatever, and it doubles, because it's not uncommon for that to happen down here, that's when I say, you know what, I think it's time to sell my initial investment, so I know that I can secure that money, and then whatever is free is, however high it goes after that, I can just sell it when I'm happy. That's what I've always been taught is, just sell when you're happy. But make sure you secure that initial investment first, and then, ride whatever free shares you want until you're satisfied with your profit. And the reason why I say that is because I don't ever want to tell somebody when to sell a stock or set like a target selling price, because with the volatility that's down here, if I tell you to sell at, we'll just say half a penny, and then it runs to an actual penny, then I just caused you to miss out on a ton of profit. Um, so I don't like to encourage that at all. Find the value that you are happy with when it comes to selling, and then don't deviate from that. Obviously, always set yourself a plan and don't deviate from that plan. Um, but don't listen to anybody when it comes to setting some kind of target to sell or even buy for that matter. Do this on your own. Well, the only thing that I'm doing is providing an avenue or a type of strategy that I find is successful for me, but it doesn't necessarily mean it will be successful for you. Um, it's all of this kind of stuff is just my opinion, and again, it's just stuff that I've learned over time with trading this very volatile market. And so somebody asked me, is it like scaling? It's exactly like that. So like say, for example, if you have 1,000,000 shares of something and you bought in at 0.002 per share and and you see it ride up and you get to maybe 0.0015 or something, or even if it's just 0.001 per share, you've seen 800% or yeah, like let me see, 100 400% gain from that 0.002 price point that you got in at. And then once you get to a price that you're happy or you doubled your money, you can sell your investment and then scale that out. So you would sell, maybe 100,000 shares at a time or 200,000 shares at a time, almost to the point to where nobody even notices that you're selling. That's kind of how you want to do it. You don't want to just dump everything because it's going to do a couple of things. Okay. I'm going to go into this a little bit more. So stick with me. So you can kill momentum by just dumping all of your position. If you have like 10 million shares of something and the stock is really thinned out, which what I mean by that is that, it's moving much more easily than say if it was when it was lower. And you sell all of your position. If you have 10 million shares, you sell all of it and you try to sell it all on the bid price. That causes the stock to suffer and it causes the stock's momentum to be stunted. And then it also, you're missing out on potential, on even more profit had you just sold on the ask price. Because when you're selling on the ask price, that's you asking somebody to buy your shares at this price, right? So then people are going to buy that at that price as long as the stock is fluid enough, which is why I say to sell on the run, because there's going to be people buying and selling. So when you're selling on that ask price, people are going to come up and buy that from you, and then they're going to ride those shares, depending on how the momentum is rolling. Doesn't matter to you at that point because you sold it to that person. So that's how it works in a nutshell. Basic understanding is that when you're selling on that ask, people are going to come up. And that's why as oftentimes you'll see in our chat group, people are like, oh, there's a huge ask wall. It's because people are trying to sell those shares at that price. And so when you're you're whacking on the bid, you're doing two things. You're killing momentum of the stock, and you're not selling at at the maximum potential you could be selling it at. You want to sell on that ask price, typically. So I hope that makes sense. As easily as I can try to explain it to you, and that's what I plan to do. As this stock continues to run, is that I'll just scale out and sell, a little bit at a time, and until it's completely gone. And excuse me. And so that's my plan. So I will go ahead and leave this open now to questions. There's one other thing that I want to address, and that is the next stock to watch out for. There was some news that came out to it, but as far as this portion of the video goes, I want to make sure that I'm getting to any kind of questions. If news comes out in the morning, will you see how the market digests the news first? Yeah, I usually do that. I usually just see if there's like some big sell-off and then make adjustments accordingly on how I plan on, exiting if that's what I choose to do. Sometimes I'll even sell, a good chunk of my position and then just keep it there because I see potential further down the road. That might not be where you're at right now, but where as far as my positioning is concerned, I could just sell some of it and leave the rest of it for the big money if I still see potential in it further into the future. I did that with FVRD. If you guys are familiar with that ticker symbol that we played, I've been in FVRD since October of last year. I ran up the price, or I didn't run up the price, but I rode the price all the way up to almost 3 cents. Sold a good chunk of my position and kept the rest of them in there for what I think can be a much bigger profit later on down the road. But I can use, what I sold to get into something else and just leave that sitting there because I can afford to do that. Do you use TD Ameritrade? I do use TD Ameritrade. I use TD Ameritrade and E-Trade. Those are the two best platforms, in my opinion, to trade over-the-counter stocks with. The rest of those platforms will limit you seriously, and especially if you are trading with only Robinhood, you can't trade OTCs, period. I think Robinhood is garbage. You can't do any kind of technical analysis on it. News doesn't break out on Robinhood like it does on any other platform, and it's just, yeah, it's great because it's free and you don't have to pay commissions, but as far as I'm concerned, you get what you pay for, and if you're not paying for Robinhood, you're not getting anything from Robinhood as far as I'm concerned. So there's my opinion on that. When it comes to looking at your next stock for the group, do you do this once per month, or it depends? It depends. It depends on what news comes out on where volume's showing up, through scanners or whatever else, or what people might be saying. That's the beauty of OTCs down here, is that it can come from anywhere. And so that's why I always like to stress networking. And I think that's one of the great things about Techbuds-Solutions, is that we can all kind of talk together and shout out what we're seeing potential in and do our own due diligence and make decisions based off of that. So networking is everything. All right, so let's see here. Just looking at a couple of other. Guess I have to build up my money before investing in OTCs. I'm just starting in Robinhood. Yeah, I mean, look, in my opinion, I think Robinhood is trash. That's just my opinion, especially when it comes, obviously, to trading over-the-counter stocks, because you can't do it. But really, technical analysis and all that stuff, guys, when you're down here trading over-the-counter stocks and you're seeing the gains that you're seeing, you don't even notice the commissions anymore. I don't even notice them anymore. And a lot of people can attest to that have been trading. This isn't just me spouting out nonsense. It's just a fact. People ask all the time, can you trade them on Robinhood? When I shout out tickers or whatever, people are like, oh, I can't find it. It's not on Robinhood just because it's not there. All right. Just looking through here. Bear with me. Do you think momentum of MSPC is fading away? I think it did a little bit towards the afternoon, but, I'll tell you honestly, oftentimes when news breaks, there are people that sell off just out of, either that's just what their strategy is, or that's like, it's always like buy the rumor, sell the news kind of thing. And there is some truth to that. But honestly, if the news is good enough, it will run and continue to run a lot. So there's that risk tolerance that I was talking about yesterday that you have to assess within yourself. Am I willing to take that kind of risk, or would I rather just take what I already have? And so that's something you're just going to have to wrestle with yourself and stick to that strategy or stick to that plan. Okay, just scrolling down here a little bit more. Would you avoid single zero stocks if you're just starting out? I don't know what you mean by single zero stocks. I think I would consider single zero stocks like anything that's over a penny, and anything between a penny and a dime, I guess. No, I mean, I think, you could trade anything within whatever capital you have to work with. It just kind of depends on what you're willing to spend and what you're willing to risk. The more initial capital you put in, that's how much you're willing to risk. You basically have to look at it like, I don't need this $1,000, and if I lose this $1,000, it's really not going to hurt me, because that's the type of risk you just have to deal with yourself. And that's with any type of trading, guys. That's not just OTCs. You have to be willing to risk whatever it is that you're buying into, which means that 100% of it could go away. And that's the mentality that you have to have. And so that's why, another reason why I love over-the-counter stocks, because if you're used to Ricky style trading, you have to take a much larger position to really see gains in his style of trading. So with mine, and I'll show you the thumbnail once I get this once I get this video uploaded, that you can see that the market value of my position was like 23 and some change, $23,000 and some change, and my overall gains were over $20,000. So that's the potential you could have here, is that you don't have to spend a lot to get a lot, in a lot of cases. And I always try to preach diversity, make sure you're in several different positions at any one given time. So that's why I always like to say, get yourself like a $1,000 to $3,000 nest egg. It doesn't take much work to get there. I know it sounds like it's a lot to some of you, but I promise you, I've been there. I've been in your shoes. You just have to work at it. If this is something you're passionate about, if this is something that you really want to work towards, do the work, do the time, and save the money in order to do this, because I promise you it'll be worth it. Okay, so I'm glad that we were able to get that established. I hope that I was able to make that thing a little bit, make that a little bit clearer for you as far as like strategies when it comes to selling. Just to recap, you always want to sell in chunks as the stock price is rising. Sell into the run, and then you always, when you're making your sales, always put them on the ask price. Always want to sell on the ask, so that you don't kill momentum and that you can get the maximum profit possible when you're selling. Okay. All right. So the other ticker symbol that I want to talk about today, because MSPC wasn't the only awesome stock of the day, and I think that this one still has potential, and we touched on it a little bit last night, and it was ADAC. ADAC went uplisted officially, and I'm not sure, but I don't think everybody knows about it, and I'll tell you why. So let me go ahead and share my screen with you right quick. And I'm going to share right now, and then you can kind of say hi to yourself for a second. But I'm going to switch over to Investors Hub. Investors Hub is, and I'll get out of this because this is my fishing channel. I go to Investors Hub a lot of times to find information on a particular stock that I might be looking into, because this is yet another networking platform. As I've said before, networking is everything. And so we talked to a bunch of people about any one given stock, and this was one that kind of had been bleeding down for a while, and all of a sudden, volume had showed up on this towards the end of the month, and then obviously today volume really showed up, and this thing was being bought like crazy. Now, and this is why. So if you go to OTC markets, and if you're new to over-the-counter stocks, OTCmarkets.com is a hub where you can find out any information on over-the-counter stocks. So if it's kind of like a NASDAQ, if you will, of the OTC. So any kind of filings that get posted or whatever, news that comes out, typically gets thrown up here on OTC markets, as long as the company is current with all their filings. And in this case, ADAC is, and they did us one better, whereas they filed and are now certified as OTCQB. So they uplisted from a pink sheet to an OTCQB stock. And it's weird because OTC Market still has them listed as pink, but I clicked on this filing down here, and I'll show you again where it says, well, let me go back down. I just had the link here. Bear with me a sec. Oh yeah, here it is. Filings and disclosure. I'm sorry. OTCQB certification. So I click on that, and then this comes up here. This is the filing, and I went ahead and highlighted it for you. So this is why it's telling me that this is officially uplisted, because it says during the period from the company's prior fiscal year and to date of this OTCQB certification. This is an OTCQB certification. That screams that this is officially an OTCQB stock now. So I don't know why. Maybe just news hasn't gone around that this is official yet. And we're just waiting for OTC markets to update their profile on ADAC. But in my opinion, the stock is way undervalued. It was trading. Well, this is MSPC. Let me go ahead and get ADAC up. This is Trade Architect if you're not familiar with what this platform is. But ADAC closed at 7 cents today. I told you guys I got in at 3.5 yesterday and days leading up to this. But once that news broke out late yesterday that they had made the filings and sent them over to OTC markets, and then after the market closed, that's when I saw that filing that had been put into ADAC's profile there on OTC markets, and I shared it with the group, and I shared it on Twitter as well, that it was official. It's odd because it's not showing it as it is official. So this could still be in the very early stages of a run because there's not enough people yet that know that this is current, and there could be more news to come based off of their filing status. So that's just my opinion on this one. And again, this is how I find my due diligence, guys. I'm not telling you to buy into this, but I like different ones that come up so that I can show you what works for me, and then see if it also works for you. Find that strategy. This is just another strategy that I think works personally perfectly, and so I think it also one of those things where people don't know a lot about over-the-counter stocks, and that yes, there can be scams, and yes, there's a lot of risk involved, but there's real money to be made here, and I'm trying to just prove that and show that to everybody that it's not all about pulling a rug out of from underneath somebody, and trying to teach you guys how to do it the right way. And so I hope that I'm doing it. It seems like things are really catching on. People are really starting to understand, which is really great to see. The better part of that is that there's people within this group that are teaching other people, and it doesn't just all fall back on me, which I love to see, because people think that I'm always right, and I am far from it. I don't always get it right. I don't always, know exactly what's going to happen. And the great thing is that we have other people there where, where I might not have it right, they might. So that's why it's important to focus on you and the plan that you have set up for yourself. So anyway, just want to run over a couple of other things. Let's see here. What's the most common catalyst prior to a run? Gosh, there really isn't a common one. We'll say that mergers are probably the biggest one that happens down here. I would say mergers, because it happens a lot because these companies are so small. So you have bigger companies buying up smaller companies. So a merger is probably one of the bigger catalysts, I would say, that happens down here. The other thing is revenue. Revenue is big down the OTC. People buy stocks when a company hasn't created revenue in years. It's beyond me, but any OTC that creates revenue is a big deal down here. Can you buy OTCs on Fidelity? You can, but you're very limited to the types of OTCs that you can buy on Fidelity. Again, I would always suggest if you're planning on trading over-the-counter stocks to get in on TD Ameritrade or E-Trade. They don't, I don't owe them anything. They don't owe me anything. They're not sponsored. I'm not sponsoring them. They're not sponsoring me. It's just a fact. It's just something that I think that, unless somebody can tell me that there's a better platform out there, those are the two that are it for me. Somebody said ADAC. Yes, ADAC is that ticker symbol. You can go back and see the ticker that I had pulled up here in this video. Is ADAC going to a penny stock? Well, it is a penny stock. So, somebody asked, do you have problems with liquidity? Yeah, well, that's why it's important to sell in chunks and not all at once, because it's going to be difficult for you to get out of position if you have a huge position of something. So that's why I always suggest doing it that way. All right, guys. Well, I think I've talked your ear off enough. It's been about 25 minutes. I like to try to keep it within 20 to 30 minutes. But I'm going to go ahead and thank you guys again for watching tonight. I hope that you learned a lot, and I hope that you continue to learn. I hope you continue to come back. If this is your first time here, please subscribe to my channel. Please like this video. I can't do this without you, so I appreciate the view. And that is all I got for you guys tonight. No Gucci gang. What is wrong with you? Who do I look like? Wrong channel. All right, guys. That's all I got for you guys. See you all before the bell. And as always, D Smith is out.